We will tell you the 11 tips to save money on a low income. Watch this video till the end because all the tips are important. Now, let's start. Number 1, make changes to your budget. Think of a budget as a spending plan. Just by reevaluating the present budget or creating a new one, you can discover effective ways to save more money. Take the income you have and distribute it among various spending categories. These can encompass your fixed and variable expenses, debts, and savings. Reviewing your budget can assist in identifying areas where you can reduce expenses or where you may be spending excessively. It is important to have a clear understanding of your monthly expenses in order to effectively work towards your financial objectives. For those with fluctuating income, it can be beneficial to allocate funds for bills and expenses during months when your income is higher. By ensuring you have a financial cushion, you'll be better equipped to handle any periods of reduced income and meet your financial obligations. Number 2, consider using the 50, 30, 20 method as a strategy. Understanding the 50, 30, 20 rule can help you effectively manage your finances. This budgeting method divides your after-tax income into 3 key spending categories: needs, wants, and savings. Expenses should account for 50% of the budget and should cover essential items such as groceries, utilities, housing, and minimum debt payments. Allocate the next 30% of your funds towards your personal desires. There is a wide range of options available, from subscription services to vacations. Another 20% is allocated towards savings and debt repayment. If you want to know more amazing financial tips and secrets to get rich, then do subscribe to our channel and also press the like button. Number 3, consider opening a high-yield savings account. High-yield savings accounts provide a higher annual percentage yield, or APY, which can assist in growing your savings. These accounts function similarly to regular savings accounts. Deposits and withdrawals can be made as per your requirements, although certain banks may impose a fee if you exceed a certain number of withdrawals in a month. These accounts are designed to maximize your savings by providing a fixed APY that grows over time according to your bank schedule. You have the option to choose between daily, monthly, or yearly intervals. Understanding how interest compounds can have a significant impact on the growth of your account balance. Many banks offer the convenience of online access or a mobile app for account management. Number 4, streamline your finances. There are methods to streamline your finances, such as setting up automatic bill payments and savings contributions. If your employer permits it, you might have the option to arrange for automatic deposits from your monthly salary into one or more savings accounts. By following a structured plan, you can effectively manage your expenses and consistently set aside a portion of your income for savings. Eventually, the funds you have in savings may become an afterthought. Prior to automating your savings, it is important to establish a well-defined budget and ensure that the amount you set aside for savings does not leave you with insufficient funds for your expenses. Number 5, consider creating weekly grocery lists. Making lists for groceries can assist in sticking to a strict budget. By having a clear plan in place for your purchases, you can avoid the temptation to deviate from your savings goals. Making a weekly grocery list can be a great way to save money instead of constantly eating out or getting takeout. For additional savings, it might be worth checking out the flyers from your nearby grocery store to see if there are any ongoing sales or coupons available. Consider doing some comparison shopping and strategize to visit the store that offers the most competitive prices. Number 6, keep track of your utility use. By monitoring your utility usage, such as electricity, air conditioning, and heating, you can effectively reduce energy consumption and save money on utility expenses. For instance, opting to wash clothes in cold water or air drying them can help you cut down on your electricity expenses. Similarly, you can save energy by switching off lights when not in use or opting for a fan instead of relying on your air conditioner. Additional examples involve reducing shower duration or opting for cold water when doing laundry. For your convenience, the U.S. Department of Energy recommends adjusting your programmable thermostat to approximately 68 degrees Fahrenheit during the winter when you're at home and lowering it when you're asleep or away from home. For optimal savings during the summer, adjust your thermostat to 78 degrees while you're at home during the day, 82 degrees while you're asleep, and 85 degrees when you're away from home. These guidelines are meant to be general and may not guarantee savings based on your specific location and home. Number 7. Lower your cell phone and cable bills through negotiation. Certainly, it is possible to negotiate your current bills, such as car insurance payments or even your internet bill. Reach out to the company and inquire about any potential incentives they may have available. It's always a good idea to explore other options and compare fees to give yourself more leverage during negotiations. It may be helpful to mention your loyalty as a customer and express your desire to continue doing business with them as a way to motivate them. With many online apps, you have the option to let the app handle negotiating your bill payments for a small fee. This way, you can save both time and money without any hassle. If you're doing well, it might be a good idea to take the money you've regained and allocate it towards your savings. Number 8, reduce your car insurance payment. By exploring different insurance options, enrolling in defensive driving courses, and working on improving your credit score, you can potentially reduce your car insurance expenses. Prices can differ significantly between different companies, so it's wise to obtain at least 3 price quotes in order to maximize your potential savings. Your state insurance department may also offer comparisons of prices from major insurance companies, just like a financial advisor. Number 9. Get rid of any subscriptions you don't need. Having multiple subscription services can become quite costly. It can be helpful to review your expenses and consider which ones are necessary and which ones can be cut back on, without sacrificing all of your enjoyment. Next, evaluate the services you currently have and determine which ones you are not utilizing or are not completely satisfied with. It may be worth considering canceling those services. Number 10. Make sure to set aside some cash. If you happen to come into some unexpected funds, it might be a good idea to set aside a portion for savings. Even smaller amounts can come from things like monetary gifts or cashback rewards. Consider opening a separate savings account to help resist the temptation to spend the money. You can even choose a name for the account that reflects your financial goals, serving as an additional source of motivation. Number 11. Avoid relying on credit cards for your purchases. Using credit cards can be advantageous, but it's important to exercise caution to avoid accumulating debt by overspending. Consider the potential impact of making an additional debt payment on your savings. Instead, it may be wise to use credit cards sparingly. Consider adopting the cash envelope budgeting method, which can be quite effective. By limiting yourself to spending only the cash you have allocated for the month, you can avoid overspending. If you have accumulated debt, it may be helpful to explore strategies such as the debt snowball method to effectively manage and eliminate credit card debt. One effective strategy is to set a more immediate objective and prioritize the repayment of smaller debts. This provides a feeling of accomplishment and serves as a source of motivation to keep going. Consider making minimum payments on all your debt, while allocating any extra funds towards paying off your smaller debts each month within the limits of your budget. Now subscribe to our channel and watch the video appearing on the right side to know about the 9 passive income ideas that could make you rich.